All right, welcome back, everybody. Let's get back to the equity markets today. Stocks are retreating in today's session after 8 straight days of gains for the Dow Jones Industrial Average. Our next guest says, no big deal. The markets are due for consolidation. For more on the day's market performance, we're joined now by Linda Duessel, Senior Vice President, Portfolio Manager and Market Strategist at Federated Investors in Pittsburgh. Linda, great to have you back on Street Smart. So no big deal to see some pullback here.
No, not at all. Just as you said, we had a long string of positive run here. Once we made it over S&P 1150, I think that was a very big deal. And to consolidate in and around here is a healthy thing. Let's get a melt up, but make it slow.
Melt up. Okay, make it slow. Let me ask you, though, in terms of a consolidation, could we see a significant round of consolidation here, a significant correction?
Well, again, I think S&P 1100 is the most important number we really want to hold. If we can hold that number in through next week, particularly if we get news over the weekend that they do pass the health care reform and the market starts to wonder what that will mean in terms of the investment landscape, what with the new taxes on investing. I think that would be a really strong sign if we can make it through next week up above 1150.
Linda, what will it mean if we get health care reform passed? What will it mean for the market in your view? Because you've definitely seen equities trade off of whether or not there is momentum or not behind this legislation.
Yes, well, I think that the market really wouldn't like it at all because of the penalty on saving, particularly with the Medicare, the new Medicare the new Medicare tax, rather, that they're planning to put on. But then over the longer term, I think the anger that's out there because of all this might lead to, if not a complete turnover in the leadership in the Congress, might lead to at least a significant decline in the numbers of Democrats, leading to gridlock. And the market tends to like gridlock. So that would actually be a positive longer term view until we have to start paying all the taxes.
Let me also ask you about one other big thing that's really been playing out in the market today, Linda, and that is, first of all, you had India surprisingly raise their interest rates here, and then you also have a lot of speculation in the market right now about whether or not the Fed is getting ready to raise the discount rate potentially before its next scheduled meeting. First of all, what do you think? Is the Fed getting ready to do something maybe before a scheduled meeting?
Well, I think that the Fed has been trying to be very transparent with what they're going to do and give lots and lots of signals. I really think that, I'm not sure what to say about the discount rate, but for sure about interest rates going up in general. Right. I really think they're going to wait for a number of months of positive employment.
So in terms of your advice to investors, you guys are giving advice based on that the Fed is going to hold for many months here.
Yeah, even if the Fed raises interest rates, historically, when the Fed first raises interest rates, the market will pull back, but then the market will tend to rise again to new highs as it realizes that they're only raising interest rates because we're growing. I am not worried about interest rates really at all. What we're watching for are the taxes. I think that's what's going to do us in eventually.
You do, but you're still holding to what? I think the last time we talked to you, you talked about in early March about the S&P climbing past 1,300 this year. That's about a 12%, roughly 12% gain from where we are to. Are you holding to that level?
Oh, yes, we think we can get to S&P. I think the interesting number will be S&P 1200, 1250 for sure, 1252 being the level at which we closed way back in 08, just before Lehman went bankrupt. We can get there, I think, reasonably easy, maybe even to 1300. You come towards the end of this year and you look like earnings are going to continue to be strong, which they could, coupled with a potentially gridlock policy situation in D.C., you could potentially do even better than that as we move into next year.
You know, Linda, we like to sometimes put things in black and white or bull and bear. Let me ask you, you consider yourself a bull in this market?
I think so. We're pretty much bullish, yes.
All right. So then how do you play it? Are you playing on the retail? We've seen some strong retail numbers. So are you playing into those consumer discretionary numbers? Sounds like you're not being defensive.
No, we're not being defensive. You made an excellent comment with consumer discretionary. I think that the next move to the market higher will be evidence that the consumer really wants to spend, number one, and number two, that it's something other than a jobless economic recovery. Those two things would bode well for areas like consumer discretionary. Technology we continue to like very much, and of course, around the globe, continuing to see a V-shaped recovery in many of these markets. We're going to like the energy, materials, and those types of groups, industrials as well.
All right, got 20 seconds left here. So you're a bull right now. Do you worry, though, about next year, 2011? A lot of people start pointing about the debt deficit. We're going to have to deal with that issue. They're going to be not these stimulus programs that have been kicking in, helping out the economy, the global economy. Does 2011 start to be problematic in your view?
Again, we want to emphasize that what will be a problem was when the tax increases start to really hit, and the realization of the tax increases on many things, and maybe even some new ones when we have to start paying the piper. That is when I think we should start to get more conservatively invested.
All right, so watch that tax policy. Got it. Linda, thank you so much. Linda Duessel joining us.
Thank you.
Here on Street Smart.